Greetings, everybody. This is Jeff Scott. It is May 14th, 2017. This is my top-down review. I entitled today Approaching Danger, and that is not because of the North Korean missiles that were launched earlier this afternoon, but rather because of where we are in the market. The disclaimer, this is for education purposes only, and a recommendation of the Ministry of Education, not investment advice. I'm a doctor, not a broker. The only licenses I carry are a medical license and a driver's license. I am not licensed to tell you what stocks to buy. I'm not licensed to manage your money. I'm independent, which means I'm not affiliated with any software vendor or trading company. Tools demonstrated and folks that I mentioned are those that I use in my daily trading, and I paid for all the tools I demonstrate. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. And if you trade options, please make sure you're aware of the Option Industry Council handbook of risk so that you are aware of the risk that you're taking. I have a number of influences. I do call them out. I started as a can-slim trader, learning from O'Neill. Morales and Catcher put him on amphetamine. Ian Woodward made him electronic and improved him. Ron Brown was Ian's partner. And that is the basis for my approach, which is top-down investing, looking for high-growth stocks in specific patterns. John Person, I learned about him years ago. I've been a long-term owner of his indicator package, read his books, have been a student and attendee of many of his seminars, including I'll be at the one coming up next week in Vegas. He's just a great trader and a great teacher, and he's been in the market since I was a resident, and he was working with George Lane of Stochastics fame in Chicago. Owned a brokerage, traded on the floor, really I'm an expert trader. So I use the left-hand side to find the stocks I'm interested in, and I use John to help pull the trigger. A couple other things to highlight. George Lee, my buddy from Canada, whom I've had the pleasure of sharing the podium with from time to time. Van Tharp, the guru on position size, money management. The more I trade, the more I realize is the best way to make money and eliminate some of the biggest drawdowns is money management. And I don't know anybody that does a better job from an educational and psychology perspective. And then someone I've gotten fond of over the last couple of years, Guy Cohen. He has a number of sites. I joke with him that I thought they were, I don't even want to use the word, I thought they could be more professional. And he's actually relaunched a number of things. He's got some great tools. And, you know, if you're not ready for John's stuff, or you don't want to, you want to find some great scans and some tools that build upon CanSlim, but maybe are a lot easier, I really point you to Guy, Flag Trader and Option Easy. Both are programs that I've done, educational programs I've done, and they have some scanners and indicators that I've used on a daily basis. So what do I need on my desert isle? I need TradeStation, Thinkorswim. I need HGSI and EdgeRater. The rest just make my life easier. HighGrowthStock.com. This is the website. I point out two things. Free 30-day trial. They don't ask for credit cards. And if you go under investing strategies, they have a number of videos by both me and Ron Brown that you can download and access for free without logging in. I do want to point one thing out, and that is the learning curve is steep for about for the first month or two. And once you get your hand of it, I think it's a great program and a powerful program. They're old, but I have a 6-pack of videos that go over each of the main buttons on the program, which can make it useful, I think, for trading and starting out with it, as well as I have a video from one of my seminars when I went over the indicators. So if you email me at either highgrowthstock.com or, at hgsidoc@gmail.com or Jeffrey at highgrowthstock.com, I will be happy to send them to you. I guess to make it simple, hgsidoc@gmail.com. Just ask for the videos, and I'll send you a Word file that has the links. Stock patterns are cyclical. Where are we in this market? You need to know where we are because it tells you what you're going to do. I keep saying over and over again, we're here. and then we take another leg up. One of these days, that's not going to be the case. We're getting closer to that, as we've talked about and others talk about. Topping is a process, not an event. And this sure feels like a market that's topping. And we'll show you why I think that over the next few minutes. So I am firmly getting into this side here, which means I'm now looking at bear call spreads, buying puts, selling calls against my positions as a little bit of insurance, shorting stock perhaps, and then potentially buying contra ETFs, all different things that I might do to protect me. Now, to be fair, I still have a lot of long positions. I have less than I had a week ago. I had a fantastic week in the market. I hate to sound like somebody who sends emails out daily and talks about that on the worst weeks and the worst days. But I did have a great week, but it's because I'm in the stocks that were narrow, the WB, the BZUN, the AMZN, the Facebooks, the Netflixes, the Apple. I mean, here I am talking about the market rolling over in the same week that Apple and same day, Friday, that Apple and Amazon hit all-time highs. So it is a market of what's divergence, where the overall market has started to go down, but we're feeling like the market's doing fine because of a limited number of stocks. Speaking of the market, here's Friday end of day. So just very quickly, we can see that energy, despite oil popping up, is still mostly weak. I'm not sure it's going to stay that way. And I found some energy stocks that I was interested in. I look at finance. Well, bond yields are falling. We're hearing there might be one tightening instead of two to come, all which sounds like a weakening economy potentially that's hiding out there. Not great for the banks. I look at industrials, mixed, leaning to the negative. Technology has been where the strength has been, especially semiconductors. Staples, for the most part, look weak. Consumer discretionary, there's my buddy Amazon, up $14 on Friday. Retail, except for Amazon and CarMax, which is sales, is red across the board. Weak retailers, we had numbers from Macy's, Nordstrom's, Kohl's, and even those that surprised to the upside couldn't make up for the losers. Utilities, well, it's a defensive play. Last week I said to sell biotech. It's time now to start thinking about buying it back, in my humble opinion. It was the right call. We'll look at IBB in a while. But I do think there was a short pullback. And why I'm interested in biotech has a lot to do with what happens on May 17th. On May 17th, the abstracts, which is sort of short snippets of the data to be presented at ASCO, the American Society of Clinical Oncology meeting, will be released. That means on the 18th, people will start to place their bets on the various biotech companies and their data and who's going to make a difference. So companies like Celgene, Amgen, Incyte, Tesaro, Takeda, Bayer, Biogen, IDEC, Genentech, all will be in play, as will a host of smaller companies. They usually run up into ASCO and then they go back down with the summer. So watch biotech over the next couple of weeks. Airplanes were weak. Gold miners starting to strengthen. Sometimes you'll see them strengthen a little bit before the metal does. REITs were weak. I'd hate to be owning REITs that own shopping centers right now. Casinos showing some strength. And isn't this interesting? Where we have a lot of red in our market, the foreign markets are certainly outperforming the U.S. Speaking of the U.S., again, we have daily charts here from Thinkorswim. Upper left is the E-minis, middle NASDAQ, NQs, YMs. So you got the S&P futures, the NASDAQ 100 futures, the Dow futures. Lower left-hand corner, IWM, which is an ETF for the Russell 3000. The VIX, or VIX futures rather, and dollar futures. So what do I see? I see there's only one that looks strong, and that's the NASDAQ 100. And notice the little white bubble occurring on Friday, which means it's an all-time high on the NASDAQ 100 futures. That's interesting. That's not what it means. It means that it's the highest on this period of time frame, but I believe they closed at a new high. You'll notice that both the S&Ps, the Dow, and the Russells have pulled back into their moving averages, still above the 200, and the 50 is above the 200. The weakest of all probably being the Russell. You notice the VIX is down about as low as it goes on the VIX futures, and the dollar has pulled into the 200-day moving average. It'll be interesting to see if we can get a move off of the 200 in the dollar. It'd be something certainly to look for. But any way you want to look at it, the markets are not as strong as they could be, except for the NASDAQ. We look at the weeklies, and you could see everything's in a pretty powerful uptrend, even the Russell on the weekly, except for the VIX and the dollar. So I'm worried that in the setting of a longer-term strength, there's some clear shorter-term weakness going on right now. If I look at another tool, this is Genesis. I like this because I can see so much on one page. They're daily, weekly, and monthly from the 3 rows. From a column, it's the E-minis, the NASDAQs, the Russells, the NYSE, and the Dow futures. And what do I see? I see at the dailies, except for the NASDAQ, things look like they're rolling over. The weeklies continue to be moving up, although the Russell, as I said before, is the weakest. Notice a lot of red candles this past week, and then the monthly still looks strong. It's tougher to call a top than a bottom, and I'm not sure we're there yet, but as I've said and others have said, it is a process, and I think we're in that process now. Rates fell this week. You can't see it real well, but both the 10-year and the 30-year rates fell a little bit. Now, if that happens, that concerns me about economic weakness, and that's the one thing that I think can really derail the market. The GDP the first quarter wasn't so hot. I saw some predictions for second quarter that looked a whole lot better. But if this economy falters, the market will fall with it. The AD lines, again, hard to really see, especially with the lower resolution that I use for my presentations. But the markets and the AD lines for both the small and the large stocks have rolled over a bit together, so there's no real divergence there. Breadth, interestingly, here is where we ended up on stocks above the 200, stocks above the 40, clearly in the middle of the range. So breadth remains strong and not overbought, showing perhaps that the market's holding up a little bit better. Now, here's a big one. Last week, I think we talked about that we were getting up to the area of the new high, new low for 3 months, that I start to get worried about reversals, and we did have a reversal. So even though the market got stronger on certainly the NASDAQ 100, you could see that we've given up a lot of the exuberance that in the market, so that takes off some risk. The daily McClellan, we have a zero, what's he call it? A zero line reject, where we failed several times on the oscillator to break above zero, and continue to have lower highs as we've turned down again on the summation index. So we continue to have a divergence between the Magellan, between the major indexes and the Magellan. And on the weekly, we've broken below zero and lower highs on the summation index, all consistent with reducing breadth in this market leadership. The buckets, so this is 5/12, which would be Friday, using my S&P 1500 from 3/12. That's the difference in those 2 dates. But the buckets have clearly moved to the left, where we're having more and more stocks in the lower part of the Bollinger Bands, and nearly 60% of the stocks in the S&P 1500 are trading below the midline. Now, that's a good thing if you are long the market. Excuse me, let me back up. That's a good thing if you are short the market. It suggests that the stocks have weakened, but it's not showing me any over-exuberance to the downside or upside that would tell me reversal is close. It goes with a overall generalized weak market. Again, when I look in the setting of new highs on the NASDAQ, it just tells me the market's starting to have some substantial divergences. Last week, I spent some time on the Hindenburg. I refer you to that. On the left is using the NYSE, which is the traditional measure. And you could see we had one fire on the 4th, which was last Wednesday, and it did not fire, I think Tuesday or Wednesday, and it did not fire again, although 3 of the 4 parameters were positive on Friday. For concerns that the NYSE has changed a lot over the years with more interest-sensitive stocks, I wanted to look at another index, so I looked at the Russell 3000. Now, the problem with all of these analysis is I have to use the components of the Russell today, which may not have been exactly the same components 5 years ago, 3 years ago, etc. What I found was it's fairly similar signals fire for both the NYSE and the Russell. And here's the concern. What I told you last week is it's not the first Hindi that bothers me. It's when I see a series of Hindis. So thus, the Hindi that we had a week before the election did not bother me on the Russell. Okay. However, in the last 8 trading days, we have 3 Hindis fire. That bothers me a lot, and that's enough for me to start to what's the word I'm thinking of? Concede that this market is going to roll over, and therefore I started to position myself, although not fully. And I think we all have to take that with a grain of salt because the standard way is the NYSE, but I think it's interesting to say the least. Market tone. This has also bothered me where we have 3 volleys of kahunas to the upside, yet I never flipped most of the market into green. So we're in a choppy environment despite some bullish characteristics, and it just, to me, is consistent with not the entire market behaving the same way. And again, if I look at sectors, the sectors continue to show, and I'm only looking at this 3rd column down, that it's choppy on the sectors as well. So it's not a market that feels bullish despite some of the new highs on the indexes. Now, here's the bullish slide of the night. One of the things that we learned from Ian was to build indexes of leaders and to use them as an early warning signal of a market turning over. The index that we use here is called the Canaries. It's the FANGs. It's the Facebook, Amazon, Netflix, Google, Apple, Baidu, and Priceline. And you could see that the FANGs are at an all-time high. Everything on this chart is bullish. The only thing that's at all bothersome is probably the distance between the 200-day and the close of the price. And if you notice, there's this line here, which is called the high jump bar. When it pushes up across the top, we typically see pullbacks. And that measures the extension compared to the prior 200 days. And what you should be able to see here is that we are about as extended as we get in this marketplace, at least on the Canaries. Know your news and earnings. On the left is an economic calendar from Bloomberg. This was copyrighted by them, so I'm not even sure I'm allowed to show it, but that's why I put the reference there, and I thank them. It's freely available on the web, and maybe in the future what I'll do is just refer you to that. Here's the reference, and they do a great job of showing you. And of course, that is last week's. So let me pause it. Well, this is probably a better way of doing it from the copyright perspective, but here I am on their website, and you can see that I've set it now for the 15th. So let's just quickly look at it. We have some auctions. Interesting to see in the 10 and 30-year note settlement on the 15th. Industrial production, housing starts on Tuesday, energy on Wednesday, jobless claims on Thursday, leading indicators on Thursday, and then on Friday, the ever-loving Baker Hughes rig count. I'm thinking of dinner. So there you have it, this week's economic calendar, and I refer you to that. I'll take that out, the presentation, for further use. Back to the presentation. Here are some of the earnings for this week. Even though it's a slow week of earnings, boy, are there some big earnings. Home Depot, Cisco, Alibaba, Walmart, Applied Materials, and Salesforce.com. So my quote on the bottom is something that I hope you all pay attention to. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. I often will hold stocks, especially if I've got lots of cushion and profits, but you have to know so you at least make a conscious decision. Market thoughts, topping process remains with inherent leadership and rising groups. Bang stocks are propping up the market. Retail fell hard on Friday, becoming clear the impact of Amazon. EPS winners still get rewarded. Those that misses are adding to the carnage. Not time to be a bullish hero. Start by selling laggards and raising stops on winners, and sharpen the pencil for the downside and get ready. When the downside comes, I know what I'll be doing. I'll be shorting stocks, buying puts, doing bear call spreads to generate some premium, and also buying contra ETFs. Now go into our usual agenda of a top-down analysis. I am not using my regular computer today, so I apologize if it's not as clear or the sound is not as good. Very quickly, I like to go into TradeStation, and I like to look at the indexes and just get a sense of the strength of the market. I call it my 5-point analysis. I start with the E-minis, and what am I looking at? I have 3 time frames. I've got daily, weekly, and monthly. And I look at 5 things on the daily chart, and then I look at direction and color on the weekly and monthly. On the 5 things, I look at, are we in a buy or sell? These are person indicators. They are free on Thinkorswim. You can purchase them for TradeStation. I look at the color of the bar. A green bar means the buying window is open. It's okay to go long or hold. A red color bar tells me the selling window is open. It's okay to sell short or hold, but you shouldn't institute new longs. And blue, you can do whatever you want. This is from Alexander Elder at elder.com. It's a relatively inexpensive indicator package. Also included in that package is the Elder Auto Envelope. I've noticed that when stocks get above or below, they typically come back in right away. It's the indexes, even here you can see the weekly on the E-minis. It went sideways. It didn't pull back harshly, but it got back in within a couple of bars. The 4th thing I'm looking at are these red dots that are sitting on top of the price bars. Those red dots suggest that there's some divergence in the MACD, and it tells me to be concerned that perhaps the pressure on keeping the price up, or if the dots are green down, is changing, and there might be a direction change. And lastly, I look at what's called the high jump bar, which is the thing I showed you with the NASDAQ, with the canaries, and I look at what percent are we at the highest amount of extension in the last 200 bars. So, and then down here for the 6th one are the daily, weekly, and monthly bongos. So very first look is we are in a buy signal on the daily, weekly, and monthly. We have got blue bars here. The fact that bars are blue, that suggests we might be changing and this uptrend is at risk. We have the red dots on the top. That also suggests my uptrend is at risk. We're within the envelope. We're at 56%. We're green here, blue there. So I see an uptrend under pressure, but still an uptrend. I look at the Dow. It's a new downtrend on the daily in a red bar within the envelopes, 43%. Still in a buy longer term with blue and blue. So the Dow is now in a short-term sell, weakening on the intermediate and longer term. This one looks like it wants to go lower. I look at the NASDAQ, which should be the strongest of the bunch, and what do I see? We've been in a buy signal going back 19 days. Notice the red dots here. They work themselves out by going sideways. We've got blue paint bar, which bothers me. We're above or at the upper envelope. That bothers me. And we're clearly close to 95% on extension. I think I said the same thing last week. This is a market that looks like it's it's still running, but eventually it's going to run too far. Are we too far now? Notice that the MACD histogram falls despite higher movement. The weekly has the red dots, so the strongest of the bunch is the NASDAQ, but I worry when I see a high jump of 94%. And lastly, the Russell, the weakest perhaps, also in a sell signal, but going back 13 bars, a red bar here, in a weekly and a monthly buy signal with blue bars, 31%. So the Russell is in a sell signal. Short term, longer term, it's holding okay, but that's weaker compared to the others. You think about a market that's been an uptrend for a long time, the first place that you're going to see weakness is going to be the shorter term charts. Now let's take a look at the dollar. And you can see the dollar is in a new buy signal, although it's a red bar, which is worrisome. Weekly and monthly are in downtrend. So when I see this and what looks like a high closed or low closed doji setting up, I suspect the dollar isn't done coming down. Notice the weekly bongo on the dollar is still red. If the dollar is weak, what does that mean to oil? Oil popped up a little bit, and you could see that we even had some hint as oil had the green dots underneath showing that you're having less pressure to the downside, followed by blue bars, ultimately a buy signal, and it looks like it wants to go higher. The opposite of the NASDAQ 100 because the new buy on the daily is accompanied by a lot of weakness on the weekly and monthly. Another thing that might be dependent on the dollar is yellow metal gold. And as you could see, it too bounced on this week. It's been in a monthly buy signal. Had pulled back below 1100, but the weekly is in a sell signal. So gold to me has been in chop. Is it time? Maybe it is, and we'll take a look at that at some point. And lastly, the VIX is in a buy signal, but it's in a weekly and monthly sell signal. It's blue bars. It's not that impressive, and it's still in a weekly bongo. So I'm not yet ready to count on the VIX moving up. So how do I summarize all that? I think I'd summarize it by saying that we are still in a what's the word I would use? We're in a topping formation. Longer term stronger than shorter term, and will the longer term cause exert the pressure and the market turn back up, or is this the beginning of the end of this bull? Go look at your calendars. It's the middle of May. It's tired. It's been going for a long time. I start to pay a lot more attention to weakness in this setting than I may have paid attention to 2 months ago. Now let's go and start to look at the market. Let's open up Woodward and Brown user groups. So let's look at Major Markets Plus. Let's go to top-down view, which is putting the most value on Friday, a little bit on the last week, and just a little bit on longer-term charts. And what do you see ranked by raw combo? That start up top are bonds, gold, gas, and commodities. That's not what you want to see for a bull market. On the bottom are the Russell, the Dow Transports, the mid caps, the small caps, the industrials, and the big stocks. The one thing holding up this market is the NASDAQ Composite, Biotech, and Semiconductors, and NASDAQ 100. I mentioned last week, I did say I was selling my Biotech or getting rid of my LABU. And if we just take a look at it, here was Friday last week, and we traded below the 50, but we really didn't do anything. We dropped 2-3% on this day here, 2.17, and we're still trading within that bar. So I thought we were going to drop these two candles with the bottoming tails, get me a little bit concerned, and I got out, and I'm ready to go back long if I get the signal. So let's take a quick look at some of these. Same things we just looked at, so I'll make just short comments. S&P 500, Sorry for these boxes here. When I look at it with my regular resolution, they don't get in the way, but we're only looking at the right of the chart, so it's fine. S&P 500, lower left, upper right, clearly going sideways, sitting on the 17-day moving average. Daily bongo's gone red. Looks tired, but it ain't over till it starts closing below that 50-day moving average, so we still have a chance to turn up on the S&P 500. If I look at the Dow Jones Industrial Average, looks exactly the same, a little bit closer to the 50. That 50 is my line in the sand. Notice on both of these, the weekly bongo is green, and this is that Hindenburg that occurred a few days ago. If I look at the NASDAQ, you'll see a different picture, and you see a market that's still at highs, kind of went sideways the last 3 or 4 days. Notice the tack of the dojis here, so not a lot of movement, but it hasn't, not a lot of difference between the open and the close. On Thursday, it traded off and it closed back above where it opened. A lot of indecision, I think, on the NASDAQ, and maybe that's not a good sign. The NASDAQ 100, which is the leading the market, even stronger. And then the Russell 2000, which has been one of the weakest. And you could see the Russell 2000 has already pulled back to the 50. And whether or not that 50 holds here is very critical. And notice that this line here is the weekly bongo has been red going back to March on the Russell 3000, and it has gone nowhere compared to the other indexes. Just for completeness' sake, we look at the dollar, and you see the dollar sitting on the 200-day moving average, kind of an important line. On the way down, I'd expect the 200-day moving average to act as support. On the way up, I'd expect it to act as potentially resistance. We got to hold here. If we break down below here, the dollar is going to have to fight for itself a little harder. If I look at the VIX, you want to see what a bad trend looks like. Here's the VIX, and it's off of its all-time lows by about less than a point. The VIX can't get out of its own way. The low VIX, if it just goes sideways, to me is conducive with making money to the long side. It's when the VIX starts to go up that my stocks get punished, and when the VIX falls hard is when I make money by going long. And again, just for completeness sakes, we'll look at gold. Is it going to hook and go on to new highs? Well, I'd love to see it take out the 200. It's in a weekly bond go down. Now, interestingly, look at gold. Let's look at gold miners. Gold miners just got above the 50. And I think is interesting, and maybe gold miners here are leading gold higher. If I look at silver very fast, I can see that silver is also hooking up a little bit stronger than the gold. So we'll have to see what happens with the miners, but if you're a gold or silver bug, and whether it's North Korea, whether it's slowing economy, whether it's the weakened dollar, the season to buy metals might be arising. Now, I want to just I don't usually do this, but let's take a look at this ETFs for spiders on the sectors. And I didn't want all of them, but that's fine. So let's start with consumer discretionary. Consumer discretionary is in a nice lower left, upper right. Got a PSAI reversals. It's still in a bongo green to the upside. So pull back to the 17. This would be a natural place for it to bounce. Can't say this is weak, and this includes things such as Home Depot, Viacom. I believe Amazon is in consumer discretionary as well, although I'm not sure if it's discretionary or technology. So that's the sector, consumer discretionary. Staples, sideways now for some time, sitting on the 50 in a squeeze. If this breaks down, it could fall all the way down to the 200-day moving average. It's sitting in a squeeze, so if it breaks one way or the other, it might move hard. Energy, certainly been in a downtrend since February or going back to December. Notice how this first, the 50 was support, now it's resistance. Can we get above the 50 before I even talk about getting above the 200? You know, we've had a nice bounce off the lows in energy. We're up 3% in 6 days. I'm not sure it makes a change. So energy's been weak, but we may look at some opportunities there. Financials, without interest going up or without a strong economy, financials are weak. And if I put up Bank of America, JP Morgan, Citigroup, and so on and so forth, they don't look any different than this chart does. Healthcare, at least it's above the 50, broke above the 50 here, held here on Wednesday and Thursday. Healthcare looks a little bit one of the stronger, lower left, upper right. Industrials also look strong. Yet you notice nothing is setting new highs. They all seem to be rolling over, but above the 50. Technology, well, here's your best. Does that not look like a beautiful stock? It's tight. It's certainly lower left, upper right. It's narrowing ranges here. I think that technology has, well, we know it's been the place to be. Is it getting extended? Maybe. Materials, this is where gold, silver are, oil, and a number of other types of things. And you look at this, and what do you see? Sideways at best. Has failed a couple of moves up. Utilities, you might expect them to be weak, but they're defensive. So, if I'm looking at a stock to buy, here's something that's been in a, going since November, uptrend, sideways, and now sitting on the 50, had mobile breakout from a squeeze, a kahuna. If this was a stock, I'd be going long if it took out the PSAR. So I think perhaps utilities are setting up to go higher. And real estate, has been hammered. Would you want to be buying shopping centers now? I wouldn't. You wonder, looking at this, if it's not getting though near a bottom and a bounce. We shall see. All right, I don't always do that, but I don't think we're going to find a lot of long things to buy, so I thought I'd look at the sectors. Let's look at the industry groups. You can see I've got 174 here. Look at 2-day up. And where is the strength? Mining, bunch of healthcare, and some internet, casinos. When I say a bunch of healthcare, I've got number 2 is specialty pharma, number 3 is biotech, number 5 is large pharma, number 12 is generic, number 20 is healthcare supplies, number 27 is medical equipment. I think healthcare looks strong. Let's look at precious metal mining. So what I like to do is I like to look usually at everything above the index. Why buy things that are weaker than the index? And let's just see what we can find. Silver Wheaton, they're changing their name, I believe. So I'm going to go down to in my webinar view, and I'm not going to spend much time going over the indicators today, but I refer you to either ask me for my webinar, my videos that will go over them, or look at previous webinars. So we're at the 50. We had a PSA reversal. The weekly bond goes still negative. We've got the 200 overhead. It's not something that I'm going to go long. Look at the short interest here, 2.5%. That's not massive. It's a sideways pattern with a lot of resistance overhead. Notice how it failed the 200 here before. Barrick Gold, deep in the pattern. Got to get above a 17 at 250. I'm probably not going to play that one either. Here's the one I like, Royal Gold. Why do I like it? Because it's now broken above resistance. It's green on the weekly bongos, had a kahuna and a pocket pivot last week. OBV popped up. And Royal Gold would be a miner that I find interesting right here. Silver. First Majestic, again, it's got to get above the 200 before I'm going to buy it. Newmont Mining, I'd rather own Royal Gold, which is already up here, than a stock that's in the penalty box. It did have a PSAR reversal and a pocket pivot. Bongo still negative. Maybe this is the time it breaks above, but it hasn't yet. Now we get to the index. So I thought the winner there was Royal Gold. Next group to look at specialty pharma. You can see I've got 4, and I know several of them. Valiant, this is the one that fell from 200 to about 8, had good earnings come out. It's starting to divest itself of some of its product line to pay off debt, and Bill Ackman's position has been closed. So let's just take a quick look at, let me see if I find my chart. It's here somewhere. Good. Yeah, you could have made 40% on this or 50% probably in the last 2 weeks, but it's hard to get excited by me on a stock in a horrible downtrend like this. So I'm not chasing after it. I will point out that the weekly bongo went green. It went green back here, and you had a little bit of a move too. Endo International, another beaten up, looks just like Valiant, doesn't it? This is one I find interesting, and I actually, to be honest, have a position in it. We had an uptrend, we had a pullback, and then on the 50 had a mobile breakout from a squeeze and a kahuna. I'm bothered by the weekly bongo red, so I'm going to have a tight leash and a short stop. But this is Cara Therapeutics, and then Mallinckrodt also in a horrible downtrend. So if I had to get excited now about one of these, it would be Cara Therapeutics. Biotech. Well, first thing I noticed is these are a bunch of little companies except for Regeneron, and the big guys are somewhere down here. So last week I was concerned with a couple, but we'll look at the top, and then I'll show you the ones, we'll look at some of the big boys. This is Sangamo Therapeutics. I don't know anything about them. Gene recognition technology, transcription factors, okay. Well, first thing is it's been in a stock. The problem with the weekly, when I do this, let me see if I can get the weekly here. It's been in a downtrend for a long time. It used to be a stock in the 20s. So you got the 200 weekly about $2 away, but it had a huge move this past week. Probably too far for my taste. A Bible gap up on Thursday, went higher on Friday. Probably worth doing research. There had to be a news event. And Trexon, I bet they're in the same space as Sangamo, and they went up in sympathy. Long-term downtrend, still got to get above the 200. Regeneron, a little bit more interesting. Sideways for months, broke out here. I don't like this candle to go long on. I know there are a lot of upgrades on it. I'm going to pass because I think that's a very bearish appearing candle. Tesaro, new approval, and they sold off hard. A break above the 50-day moving average on Tesaro I think would be interesting. It's clearly in a downtrend. It's got a weekly bongo that's red. It doesn't make money, but its first quarter, or its sales just came out, were fine. There's a lot of promise on their new ovarian cancer drug, and it's clearly a takeout candidate. And look at the percentage of short interest float. It's 25% of the float is short. Any good news, and this stock's going to go crazy to the upside. I might start to sniff around Tesaro. Array Bio, downtrend, not interested. Ionis, something happened. I can't remember the news on this. It's kind of sideways, loosey-goosey, not interested. Juno sold off because of a death on Kite's therapy, which is a similar therapy. Held at the 50, had a kahuna on Friday. Everything up here is green. I like Kite and Juno. I like their product. I am a cancer doc. I think they have something innovative, exciting, and something that's going to change how we take care of patients. But it's not yet on the market, so there's always risk there, but I'm interested in Juno. And here's Zyopharm. So let me show you the big boys, see if they're ready to come back. Celgene, this is what made me nervous last week and why I got nervous. Sold off, at least it stopped falling. I'll be watching that. Gilead. Hard to ever get excited by a stock like that in a downtrend. Biogen IDEC. These are the big guys. It's hard to get excited when I see that. Hold on one sec. All right, so that's some of the big biotechs, and I show you why I had concern last week. So I'm interested by Tesaro. Integrated oils. Last week I picked up some BP. It didn't do much. I still think it's time to start thinking about them. Petrobras comes to the top. I get nervous with Petrobras because of all the political issues in Brazil. It's been sideways, broke above the 200. The weekly bond goes green. Great earnings per share growth, does not pay a dividend. Here's just another Petrobras, Argentina, similar pattern. Shell, similar patterns and a nice uptrend now, but it's been sort of loosey-goosey and sort of range-bound for some period of time. 5.8% dividend. Ecopetrol, I believe another international oil, cheap stock. Is it breaking out of the box here? Perhaps. Had a kahuna, mobile breakout from a squeeze, but small, 1.6% dividend. Here's Exxon. The chart is deep in its pattern, but it pays a 3.7% dividend. Here's BP. And why did I buy BP? Because it broke above the 200. It pays a 6.7% dividend, and it's got great earnings per share growth coming in. So integrated oils look interesting. I bought it for the dividend. Large pharma, AZ had some great data come out at the end of the week, and that propelled the stock higher. Data was in cancer, and you could see it had a Bible gap up. I don't know what to do with a Bible gap up on a big pharma company, especially one whose earnings per share are lower. So I would probably pass, but it just drove home the information about ASCO that I pointed out. Novartis gapped up with a kahuna on Friday, a pocket pivot on Friday. GlaxoSmithKline moving up. AbbVie. This is probably the one I would play. And let me tell you why. AbbVie is a biotech from the nature of new product development, things in study, and it's an old pharma spinoff which pays a 3.9% dividend. It's sitting at free parking, which is the 50-day moving average. I'd like to see it clear the PSAR dots before I got too excited, but typically buying it at free parking has been a good thing, so I'm going to put that on my watch list. I'm not going to chase the others. Internet-based services. Well, here's when I blew. I got shaken out of this stock back here, and I never paid attention and jumped back in, which I should have. It had multiple kahunas occurring while it was basing, and then it had a big Bible gap up on Friday with a big earnings beat and a lot of excitement. Coulda, woulda, shoulda. Can't win everything, can't buy everything. Not much I can say except, oops, I'm not chasing it here, although I'm going to watch and see if it pulls back some. Let's look at this group because this is where some winners have come out of. Wixcom earnings are out, doesn't make any money. Beautiful uptrend pulling back towards the 50. Notice that the 50 has been a good place for the stock to either go sideways or launch off of. Here. So mobile breakup from a squeeze. This didn't make my watch list, but it could have. Shopify, wow, it had a big move, bunch of kahunas here, and a big up move here off the 50, and it's nearly doubled since this happened in January. The 17-day has become its new parking lot. It's extended. I would pass here. Bit Auto, I don't know, cup, handle, I don't know. I'm less impressed with this one, although it's breaking out up here as well. If there's anything here that I liked. I don't know where Weibo falls, but this is one that I've been playing. I think last week I said this is one of the stocks I was going to play on the week. Why would I have said that? I was looking at this move here, looking at the pocket pivots, and it had a great week. And then BZUN is another one I played last week. One, two, three, four, five. So after this move up here, mobile breakout squeeze in a kahuna on Friday, bought it on Monday, and then it moved up to, frankly, close to 22. It's about a 30% move or 25% move in a couple of days. So internet-based services look interesting. Medical devices, don't know Pulse at all. I wish I knew Pulse. Big move this past week. Now, anybody want to join me long on this stock? Earnings are out, I believe. Let's see the news. Pull back to support. Competitor's drug failed here. Earnings are out. Okay, doesn't really say much. We got a stock that is sitting on the 50, had a PSAI reversal, mobile breakup from a squeeze, the weekly bongo is green, and it had a big kahuna. It didn't make my original screen for this week of charts to look at because I set it at 500,000 share average, and it was 472. Let me just look at this in PLSE. To my buys. Oh, did I forget to save that? All right, I'm just talking to myself. All right, let's put it in here. PLSE. So it's in a PPS weekly sell. OBV is turned up. It's coming out of a squeeze with the PPS daily buy off of support. It looks good enough for me to go to take a position or consider. Just look at the OVI chart. What I'm specifically looking is at, oh, tell me, PLSE. Bummer, he doesn't track this one. Nope. All right. So I'm going to put this as a high risk, but I love the chart pattern and put that into my buy list. Guess I'm going to go back to lowering my filter below 500,000 because that's one of the best charts I saw today, buy watch. And I call that, I'm going to put it into my group of pullback ready to run. I like that one a lot. Zimmer Biomet also looks setting up. I don't like the topping tail. Failed at the PSAR dot. And Medtronic, similar story. So Pulse looks good in that group. And I typically go through the top 10 MLPs. So here you've got the advantage of dividends, and energy might be firming. So what do you see here? Breakout, mobile breakout, pocket pivot, everything is green out of a squeeze. Doesn't make any money, doesn't pay a dividend. The one I own is ETE, which is the second. So it's sitting on the 50 in a downtrend by Bongo. Why do I own it? It pays a 6% dividend. And I bought it coming up above the 50, above the 200 over here with the mobile, with the kahuna. Senior Energy Partners, chart looks fine, doesn't pay a dividend, not a lot of volume. Sunoco Logistics, no. Enterprise Products, no. All right. Ninth, Application Software. Oh, another one. A couple of my favorites are here, so we're going to have to look at a couple of these. Electronic Arts, I can't chase this. It's gone too far. Coulda, woulda, shoulda. Momo, love this stock, love this stock. I have a pretty good position here. And you can probably see from my arrows that I said every time it pulls back to support, you buy it. Well, guess what it's doing? Closed Friday, pulled to support and moved up. Mobile breakup from a squeeze. Pocket pivot in kahuna. The only challenge here is earnings are not out yet. You got about 10 more days. Salesforce earnings this week. What a beautiful looking chart. Multiple pocket pivots. Love the company. Love the technology. Use it in my business. Like to see it pull back closer to support. Tough to take a trade right before earnings. This is what happens when earnings are bad, even on a stock that had been behaving. Activision Blizzard's also had a big run up. So there's a lot to like in that category. And then power generation. These are some of the utilities. Calpine is the only one that made it to the top 10, above the index. And they had some news. I think they're looking at doing different things with the looking for alternatives for selling off assets or selling the company. So I do that to the upside. I also like to see what's going on to the downside. I want to go to the index group, and you could see oil and gas services to the downside. What else? Food and drug stores, some semiconductors. Isn't that interesting? Here's a couple of leading to the downside, semiconductors. You can see Himax failed. Its earnings came out, and it failed at the 200 and traded back down. Micron Technology still looks pretty good, although weak the last couple of days. Great earnings per share growth. Xilinx stalling out here as well. 19 groups to the downside, 27 to the upside. That goes with a market that's sort of going sideways, chopping around, perhaps a little bit more upside pressure than downside. What else do I do? Within HGSI, there are a number of, close this up, under smart groups, and I do spend a lot of time on a daily basis here. I look at, under my name, the stocks with big volume. Several of the stocks we looked at are listed here. I don't want something that's run away from me. I'd like to find something that perhaps is basing with big volume and get into it before it takes out. I like stocks that pull back to the 50 and then have a kahuna. Here's a number of those stocks. Let's look at some of them and see if there's anything that's interesting. There's a lot of ETFs in this for whatever reason. So you got to be in an uptrend, sideways, pull back to the 50 and a kahuna. I said the utilities look good for that reason. They came to the top of the list. AEP is a utility. So here's one that looks just like the ETF. Kahuna there. Here is a, I think, Brazilian utility, a little bit deeper down. This is bonds and margin. Here's Agios Pharma, not much of an uptrend. So the challenge is finding things with uptrends. Fold. All right, here's one. This is my pattern that I like to buy. It's a utility. I'm not that excited by utilities normally, but it is that time of year, sell in May and go away. Are we in an uptrend since December? Absolutely. Are we sitting within 1% of the 50, the blue? Yes, we are. Pocket pivot in a kahuna and a mobile breakout from a squeeze, and it pays a 3.2% dividend. If you don't want to stick your money in the bank, make your 0.1% interest payment and are looking for something you can do, you might want to look at a utility, and Amarin looks interesting. 3.2% dividend. Here's another one, CMS, uptrend sideways. Move above that PSAR dot, and this one looks interesting, 2.9% dividend. Exelon, you notice all these utilities are setting up. That's interesting. Another of my favorite scans is to come down here, squeezing potential PSAR reversal to the upside. By definition, these stocks need to be in a squeeze, and the price had to close right below the red dot. The reason why that works is because they haven't broken out yet. And you'll notice that when a stock breaks out, it closes above that red dot, and you get a little bit of a run. So if I can find stocks that are sitting right below that red dot, I can put them on a watch list and take them when they trade through that amount. So let's say Texas Instruments. Another name for these types of trades are what I call my get on a plane trade, because I travel a lot. So let me spend a few minutes reviewing that trade and how I work my stops, because I had a question about that come up from somebody. let's see how I want to do this. And then this we'll say good night after that. So the PSAR dot on Friday is at 81.47. So what I would do is I'd probably put a buy order in at somewhere around, I didn't want to do it that way. Hold on a second. Somewhere around 81.50. Okay, that would say 81.50 if it went far enough. Then I put my stop to that 200 and that 8-day exponential bar. $74.06. That's the 200. The 50 is at 80.13. 8-day exponential is 80. The 17 is 80.16. Here's at 80.10. I'm going to put my stop at 79.90. And why do I set my stop there? I set my stop there because why would I want to hold this if it trades below the 200? Now, I could argue to put my stop here. So you have a number of choices. But what I typically do is I set a buy stop. I'm actually going to set my sell stop right there. So I'm going to change my answer. I'm going to go the lowest day in the last 4 or 5, put my stop. And that is at closed at 79.45. So I'm going to put my stop not at 79 up here. I'm going to put my stop at 79.40. So I've essentially put a bracket trade in on the stock that says I'm going to buy it if it goes above the PSAR dot at 81.50. I want to go long. I'm going to immediately put in a stop at 79.40, which is below the lowest bar in the last 4. So I'm going to risk $2.10 on that trade. So I set an order with Thinkorswim that says if I take out this bar, I want to go long. Then I immediately set my stop. I'm risking about 3% on the trade. I'm buying it at a very low risk place. And if I get in, I'm going to manage my stop in the following way. So let's see if I can find what I want to show you. And then we're going to say goodbye. So bear with me a second. All right, I couldn't find exactly what I want to show you. The way I run my stops, because this was a question that came in. Stop number 1 I place is based upon an area on the chart that basically ends the reason why I took the trade. And if that happens, I don't want to be in the trade any longer. Well, I'm buying the trade because it's taken off the 50-day moving average with a kahuna. Why would I want to stay in the trade if it fell back below the 50? I don't. Give myself a little extra breathing room. I went to this bar here. My buy point is going to be that PSAR dot. Now, I could put a 1-to-1 target and say I'm risking $2.50. So I put my first target at $83, $84. And what I typically do is I have my stops set based upon the chart. When I hit my first target, especially in a choppy market, I will take off half of the position, at which point I move my stop to break even and I let my position run. When I'm up 10% on the remaining position, I will typically go to a trailing stop using a chandelier stop. If you don't know what that is, just think of a trailing stop that gets wider and narrower based upon the volatility of the market. And I would trail it from there. So what I basically done is I take profits right away, so that limits my downside risk. I have a stop that's placed based upon the chart, not based upon some percentage that I learned from William O'Neill or somebody else. I move it to break even right away and take profits, so I know I'm going to win on the trade. And then I trail it, so I capture most of the gain. Now, there is a point, if I move 20, 25% in a short period of time, that I'll actually take the automatic stop off and go to a manual stop. And that increases my risk of missing the best stop opportunity, but it also reduces my risk of being stopped out early. So that's just a few thoughts. And if you ever want to come to one of my live meetings when I have them, or one of John's meetings where I can take you aside and show you, or the Orange County meetings, which I do a couple times a year, I'd be happy to show you in more detail. So on that note, I'm going to say goodbye. I do think it's dangerous out there. And, just for grins, before I do officially say goodbye, here's what is driving the market. AMZN. This is my number one position. It's been my number one position for some time. And let's just put all these in weekly charts just so we can really get the full extent of what's happening in the market. Amazon, all-time high. It's been an amazing move since January of 2015. You had to have, I won't say that word, a stomach of steel to hold it through this pullback and this pullback. And trust me, there'll be additional pullbacks to that 50. You have Google, which slowed down some and then took off with earnings as well. You've had Netflix, all-time high. You've had Facebook, a little bit of a flag pattern, as tight as you can go, above that 50-week the entire time. Did I show you Apple? I think I did. If not, you got Apple at an all-time high. And then you got the Macy's, the J.C. Penney's, and you see the switch in the market. You've got some major winners out there right now. I showed you some of them. You've got some small Chinese stocks like the Momos and the Weibos that continue to do well as well. But I think the overmarket's going down. And who's going to win? The Russell, which sideways at best, or the, go back here so I get the right symbols. Are the small stocks going to turn around and lead us higher, or is the NASDAQ going to falter? By